Welcome to the panelists here on the financing and scaling panel. That's now the second topic we want to focus on, and it has been highlighted already in the previous panel that capital is really a key constraint. So we want to discuss about where this capital is actually flowing, where is it structurally stuck, where are the constraints. Once we have basically our first intro round, so we will start with an intro of each of the panelists. Maybe we just start with Anja at the end. Tell us a little bit about yourself, about how you came to the space, what your company is doing, before we go into the details, so to speak.
So I'm Anja Rundqvist, I'm Chief Commercial Officer at Invest Conservation, and we focus on making conservation investable. And what does that really mean? That means capital, bringing private capital in, going with on philanthropy. So there's a lot of engineering solution, coming direct air capture and so on, to suck carbon out of the atmosphere. But guess what? Do we have a solution in place already that done this for millions of years? We do. Do we invest in it? No. We have a financing gap of 700 billion, 3% gone into forest and nature. So how do we change that? That's what we're working with. So we're working on how do you actually make that investable? What are the challenges you have with that? We have a few different streams that we do that through. We do it through biodiversity credits. We do it through stewardship credits, where you link it to agriculture setups, SAF and other parts. And we do carbon removal credits on conservation parts. And in general kind of economics, you know that if there is a scarcity, there is, in some of our projects, 90 adults left of that species. They go extinct otherwise. We do today not valued full ecosystems. So we use the market, and we work in finance teams on how to bring that capital in to say what we need to do to actually solve part of the climate crisis, and we will dive into that. But in terms of technology, we're also leveraging blockchain, AI analysis of soundscapes, and meteorology measurements for removals using flux towers. So it's an interlink of climate finance and technology.
If you just can pass the mic to Sid. So same question, Sid. A bit about yourself. How did you come into the space, and what does Green Investors do?
Thank you for having us. And first of all, I think there's something very phenomenal and equitable about this panel with all these wonderful people here. So I think we deserve a round of applause, don't we? Yeah? I can't remember the last time I was in a panel with so many women around me, and it's amazing. That's the first step to get started.
Glad that diversity is still a thing. I'm surprised.
Absolutely. Absolutely. I think it's not a thing, it's just there, right? We've been mistaken in making a thing out of it, number one. My name is Siddharth Malik. I had Green Investors. One thing that becomes very hard to talk after Eric is I will give you no excitement about what we do. Eric has already done all of that. Green Investors is an investment firm that provides the development capital and develops energy transition projects all across the world. As somebody alluded to earlier on, there is a very large capital allocation for clean tech, which is venture capital, which helps sort of bring low TRL technologies up the TRL landscape. And on the other extreme end of the value chain, there's a lot of money for what is called the institutional capital, which is infrastructure capital, which comes in with hundreds of billions of dollars for de-risked and bankable projects. The missing middle, just akin to the venture capital industry, in the project space is the development capital. You have technology, you have bankability, but then there's a de-risking process that needs to happen to actually put that capital and structure an investable, bankable project out of it. That's exactly where Green Investors focuses on. So happy to be here. I think looking forward to the celebrations. Yesterday was a fantastic day, and we had some great conversations at the dinner last evening, and looking forward to this. Thank you.
Thank you. With that, to Saskia.
Yeah, thanks, Oliver, for inviting me. My name is Saskia Broyston, and I'm one of the co-founders and partner at Carbon Equity. My background, originally boring management consultant, like many of you probably in the room, recovering from that, and then 15 years ago, co-founded Yunus Social Business together with Mohammed Yunus, the Peace Nobel laureate from Bangladesh, and we basically mobilized capital to invest in social businesses in the Global South, focus on poverty. And my logic or my understanding at some point was that if we do not end the climate crisis, we will never end poverty. So I decided my next topic I need to tackle is the climate crisis. Simple little thing. And one of the other aha moments for me was indeed we need to mobilize commercial capital at scale to invest in the solutions that are already out there, because actually many of the solutions are out there, but we need to mobilize it at scale and invest it. And that's exactly what we do at Carbon Equity. So we have two goals. On the one hand, we invest more capital into climate solutions, and particularly in our case, we focus on climate tech, so not on nature tech in that sense, but in climate tech, and do that through venture capital, private equity, and infrastructure funds that are already in existence. So we're an LP in those types of funds. And on the other hand, we try and democratize the investability into private equity in the climate space. So we do have large investors like family offices investing 20, 30 million with us, but we also have investors as small as 20,000 euros that can invest in private equity in the climate space. And I think that's a very important part of the capital stack that currently is completely being left behind, namely smaller investors. And that's, I mean, there's money in the trillions in the bank accounts of savers that we're currently not yet bringing into this space. And that's really what we're trying to do with Carbon Equity. I can tell you more about that, but that's kind of in the nutshell why this matters.
Very, very good. Rosemary. Yeah.
So I'm Rosemary Sagar, and based in Miami after many years in New York City. I spent the first 20 years of my career on Wall Street, investing in international equities, including emerging markets. And for the last 20 years, I've been doing alternatives, which means investing in private companies and private funds. And I couldn't agree more with so much that has been said today. We allocate probably 10-15% of our assets to startups and direct company investments, and the lessons that I've learned in the last years, because that basically means you have to be very, very careful in your choice of the business models that you're going to back. Precisely because of this absence of capital for kind of the middle stages. So you can get only so far with friends and family. And then the business model of the company has to be such that you have cash flow starting and that sort of thing to make it bankable. Otherwise, you're just not going to get through there. And I mean, you need profitability to get to sustainability. It has to make business sense. Otherwise, you can't rely on grants or donations or whatever. It's just that's going to run out, or the political party will change, and then it's a new policy or whatever. You're just not going to get through the other end.
Yeah, I think we all agree on that. Economics is key, and we have to achieve in all those technologies the economic viability very quickly. Otherwise, it's not investable, it's not bankable. Now, with all, if I maybe widen the scope a little bit to the overall perspective, I read this a couple of years ago, this report outlining that we need roughly 275 trillion of capital to make the transition to let's say clean or net zero basically, and that we currently have like that until 2050, so that would amount to roughly 9 trillion, I think, annually until 2050 that needs to be invested. And currently we have like 1 trillion. We have like 3 trillion that is invested in the space, and 1 trillion comes from the public investors, basically. So that's controlled by them. And
So only another 5 trillion we
exactly, 5-6 trillion that needs to be unlocked in private capital. And maybe also to you, Saskia, because that's a topic that also, let's say, inspired me do what I do. How do we unlock actually the capital from the smaller investors? Because I personally think that, and what prevents this from happening today? Maybe this is a topic here, question to you.
Yeah, absolutely. I mean, I'm not sure that we can fill the full 5 trillion with carbon equity yet, but we're on it. We're on it. I'm working on it, Oliver. And no, but indeed, I mean, indeed. So there are different sources of capital that will help solve this problem. It's the private sector, big companies investing in this space. It is obviously the public sector investing in this space, though we see that a lot less that is happening. And I think, let's say, geopolitically, that's not so much in favor right now. So that's why the private capital of individuals and savings are actually coming in as a third and additional component that we shouldn't forget. And when you currently look at the way people invest, the majority of investors really invest in public markets. So publicly listed stocks. I buy Oliver's stock, he sells it to you, and then you sell it on to that person. And so that's what it actually means to invest in public markets. In the end, after the initial public offering, the IPO, no additional capital really flows into the solutions in the real world. Which is why we decided at Carbon Equity that we needed to focus on the private markets, namely invest in venture capital, invest in private equity, invest in infrastructure, because that's the only place where actually new money ends up in the companies and therefore actually makes a difference in the real world. So just to say that as a concept. However, if you look at who can invest in private markets today, that's mainly big institutional investors, very large family offices, because the minimums to invest in these private markets are usually too high. I'll just give an example. Legally in Germany, where I'm from, 200,000 euros is the minimum that you can put into a private equity fund. But the reality is, if it's a good private equity fund, they're not even going to look at you if you don't put in 2, 3, or 5 million. And some of the large infrastructure funds have minimums of 20, 25 million. So this is a real barrier to getting private capital into this space. Like, people just simply don't have the access. The minimums are too high. They also don't have the network. They don't have the access because, of course, this is a somewhat of an intransparent market. And on the other hand, we see basically these millions, billions, or whatever the exact amount is in private savings that could actually go to the climate crisis, but it's not going there. And so basically bringing those two problems together, that's exactly what carbon equity was founded to solve. Use the money of the smaller investors and even high net worth individuals still, but combine it and let them invest in a logical way into the institutional grade private equity and venture capital funds that are actually out there. And so that's what we're trying to do. And I think that that can make a significant step towards adding additional capital. I'll say one more thing. Especially now when we're in a world where suddenly climate is being questioned again as does that actually exist? I think making people, normal everyday people, invest in the climate transition and actually making significant double-digit returns with it, that's what's going to get people motivated to ensure that this world that we're living in is actually still, savable.
Yeah, I agree, and I would add that in the first panel we heard a lot about technology innovations in the energy space, and also about economic viability and profitability, potential profitability, and I think that's also key as an offering to those private investors. If I look at it top down, I think in Germany the number of people who are invested in the public markets in terms of stocks, not funds but stocks, is only 13%. 13%, yeah, only. So there's a long way to go. And there's also trust to be built and risk to be managed for those people to put their money into into these instruments. Maybe, I don't know who wants.
I can give some perspective also. I mean, 20 years ago in the US, there was a thriving small cap sector in the stock market. There were teams of analysts covering these small stocks, and then they all got fired because the brokers were under pressure in the global financial crisis, and the commissions were not sufficient that they could make on those small stocks, so that all went away. At the same time, the US changed from a funded pension system and defined benefit to defined contribution, where it's a personal retirement plan. And basically, the average saver doesn't feel confident to be picking stocks, especially not small caps, and therefore is just putting all their savings systematically into index funds. And now the fundamental part of the stock market has shrunk to about 20-30% of the total. So it's the tail wagging the dog in a way. And this is why you see the market performance getting narrower and narrower. And it's just the largest caps companies that are determining the direction. And this is here to stay. So all the more important about the democratization of investment in privates, and for that to just make up a fraction of what's been lost. And what it used to take maybe 10 years for a company to develop to a stage where they could IPO, now you're lucky if it's 20 years. And that's a much longer period to have to fund privately.
Exactly. And I think, Sid, you can talk to that aspect, what the special approach that Green Investors basically takes here in terms of making actually the company, Green Investors, investable. Yeah, maybe you want to comment on that.
Yeah, thank you. You're right. I'm just going to reiterate those numbers so that we have them in front of us. The estimate is about 5.6 trillion required annually until 2030 to meet the net zero goals. And today we're roughly hovering around less than a 2 trillion sort of a figure, right? So there's a significant gap that needs to get bridged to actually start allocating capital to 5.6. And that's just an absolute minimum. We have to do more. Now, why is that gap and why does it exist, if you really think about it? There are tremendous amount of announcements of all these energy transition projects because ultimately technology has to get translated to commercial projects to be able to deliver what it's supposed to deliver, right? And of all the projects in energy transition, energy addition, pick your favorite word, that get announced, barely 11 to 15% actually get what is called FID'd. That's the actual annual average figure for the past 20 years. Barely 11 to 15% of the announced projects for energy transition actually get to bankability and financial and final investment decision, where the large capital actually comes in to materialize the project. And the challenge there is, somebody said, yes, in the last panel, it's about the capital. Yes, it is about the capital, but it is more about how that capital matches with the risk profile of what it is that you're trying to unlock the value out of that capital for. I actually, maybe having a little contrarian opinion, there is no dearth of capital. There is absolutely no dearth of capital. Today we're seeing numbers, if you look at AI, I mean, 200 billion, 300 billion for a startup is the norm, right? So I don't think there's a dearth of capital. What there is a dearth of is a framework that actually allocates that capital to what is called a perceived risk of a project, of a product, whatever have you. What Green Investors does is we come in very early into such projects, which we're trying to basically fill this 11 to 15% all the way up to 70, 75%. How do we do that? We come in early, we look at the risk profile of the project, we deploy strategic resources in terms of such as blended finance structures. Climate change is fundamentally a non-linear problem. Linear thinking, linear solutions, the classic project finance structures will not solve it. And it's evident. So we need to get very creative. We need to start looking at what sort of alternative blended finance structures are made available to the project, where each kind of capital de-risks a different kind of risk, and it all stitches up to create ultimately what is called a bankable project. Right?
Can you maybe explain a little bit more the term blended finance for those of you in the room who are not familiar with it.
Sure. Think of it like this. Capital is capital, right? But the way the capital is defined, each kind of capital, each source of capital, depend on where it originates from, has a different kind of a risk profile attached to it, and has a risk and a reward expectation out of that capital deployment. A blended finance structure basically utilizes capital from something as crazy as a sovereign wealth fund, which is very large, low-risk capital, into a pension fund, which is extremely low-risk, low-return expectation capital, a private equity, which is, of course, a moderate risk, moderate return, and then venture capital, which is very high risk, high return expectation kind of capital. So imagine a basket of a financing instrument where all these things are pulled in, and venture debt, which is also in private credit, and all sorts of other interesting things that we hear about today. Imagine all of this coming into a centralized basket of an instrument which helps de-risk the project based on which part of the project is suited for which kind of capital. That is, in a nutshell, a blended finance structure.
Thank you very much. Maybe I want to stay for 1 minute. Maybe I come back to that. Maybe Anja first to this topic, especially with respect, obviously, with the perspective of the new emerging instruments, biodiversity credits, even carbon credits that have been around for some time. I would say face growth, but also face adoption challenges.
And I think that's a very important angle, because often you look at how do you invest in, we talked about small cap here and all of the instruments that might be available for, but how do you go into the alternative space that is looking more of direct investments into nature? And I think often I really agree here with Siddharth, it's more about how you profile something, because anything in the world you can make investable. If you do it in the right risk profile, with the right capital, you have fine art funds, you have wine funds, and people invest in those. So what does it take to actually invest in nature as an asset class and putting that on the balance sheet? Not just going investing in the tech companies that's going to facilitate actually investing in nature that we need to conserve. And how do we make that investable? You do need to speak the same language as investors. So there's been a period of where it's been very focused on put that as a sustainability commitment, put it in your reporting, make it a brand exercise. But there's been scandals in that. And with the political shift, people don't, if we then talking more of institutional capital here, corporates and banks and so on, rather than the retail, they don't do that just to look good, because the headwinds in politics have changed a lot. So you do need to have a return. How do you get a return on nature? And how do you get a return on something that is not fully measurable? We don't measure fungi today to the extent. There are people that do. I'm meeting a lot of interesting people in this space as well. But you can measure fungi, you can measure bacteria, you can measure everything. But you need to go to what is today already available in the market, and that's carbon. So we are active in biodiversity credits, but it's nascent. There is not liquidity to actually fund and conserve what we do on a scale to that, and we are scaling on big scale. But in carbon, you have a market that people understand, and then you can start looking at, okay, if you get a 10 to 15% return on this, all of a sudden you get the financiers understanding this is double-digit returns. This is no longer just looking good. You make it investable.
Yeah, and I think the government plays and regulation plays also a huge role in that, because if you put a price basically on the natural resources you are consuming or destroying by delivering products and services, this would certainly help to channel the capital in the right, and to enable those instruments, so to speak. I would say. Now here we face certainly some challenges globally, because we've seen a pushback on the political landscape, and that's why profitability is so important. I think that would be my takeaway there. But
yeah, and also packaging in that. So you have to look at what can an investor do and do not do. So for example, we do not, a lot of the firms now trying to go into insetting, that means you create your own nature projects. What does that mean? It means you need to have resources, you need to have expertise in-house. So to Rosemary's example of some investors not understanding small cap, because most analysts covering large cap companies when there are recommendations out from the big houses. If you're looking at that, how do you structure the deal? We do not recommend corporates to go in and buy land in Brazil, for example. You're not allowed to. We do not think that corporates come in and should buy land in different places and try to structure that. We do that for them already. So it's not land ownership, it's the rights to the carbon and biodiversity, meaning that you're actually working on a tradable and, to Siddharth's point, reducing your risk. You have less political risk in that. You have no land ownership risk because we structure that with the conservation and private landowners. So it's all about building a product that actually both risk minimize, give returns, and give real impacts, and also measuring the impact. Because when you go into an investment, the same as you do in any financial market, you want to see, did that product actually deliver? And that's been problems in market. There's been scandal projects that hasn't delivered. And that's where technology plays a beautiful role of actually creating that independent measures. Are the species going in the right population? We use AI for that. Gives independent. Of course, we worked with conservation experts. But the same as well, measuring actual carbon removal, not just saying this is what it's doing, atmospherically looking at this is how much independent measures with the science behind it of what's actually been removed from the atmosphere. And that solution that is fantastic. The nature is doing it, but now we have the technology to prove that it's doing it as well.
I think that's very encouraging. Yeah.
I was just going to add to the whole discussion that you just brought up, sort of the geopolitical shift and how, of course, that also changes the messaging. I mean, just looking at us, right? This is a panel that is taking place here. It's not taking place in the Congress Center. In the Congress Center, the discussion, of course, the topics are still there, but they have been reframed. It's suddenly around critical minerals. It's about energy sovereignty. It's about how AI is fueling the green transition. Sort of these are kind of the topics that are now on the top of the agenda. It's a question of reframing the topics that I guess most of us here in the room care about and making them in that way investable. Because indeed, I mean, we're seeing now that, that it's harder to invest in topics that have a climate, like a name that's called climate or nature. It's getting more hard for international investors that also have whatever, let's say, ties to, for example, the US, et cetera, to be able to continue investing in this same way. And so I think that the packaging of telling the story is very important to be able to continue to get those trillions that we need into that market. And perhaps just to mention a couple of examples, because what we're seeing is the market for climate tech investing is actually still going through the roof. The valuations are still going up. They're just not called climate tech investments. They're called other things. And so to think out loud, for example, the AI trend is like a major driver of this. So we have in our portfolio companies like Fervo, right, that do baseload geothermal power, and all the hyperscalers are very excited to buy the energy from them. Or we have new nuclear companies in the portfolio, again, where the hyperscalers are very excited to power their data centers. We have companies in the portfolio that use AI to mine critical minerals that are relevant for battery production and cell phones and I don't know what, in a more sensible way, or some that even basically create critical minerals in a lab here in Europe. So I think the important thing for all of us in the community that actually care about making a difference on climate change, let's find new words, because sadly we're going to have to do that right now to be able to not slow down the progress.
So substance basically over label.
Substance over words.
Over label. Exactly. Anything because we are also right now running out of time. So maybe final statements here.
Yeah, just example for us. We became the lead investors in a company that provides rain as a service using ionizing technology, and that is old, but it's now made possible through the application of AI. That's where the whole edge is and the IP. And basically scalable over hundreds of thousands of miles. And the emitters run on solar. So that's this is actually a solution to literally bring moisture back from the oceans and put it on the land where it's needed. And through AI, it can be targeted. So it's so very excited about that one, and we had to get very innovative also to get the initial funding. I mean, we're we've been in the friends and family, but to get to the next stage, we're getting creative and going into carbon credits, and luckily these contracts are going to be huge. So once we're off once the field trials that are now in advanced planning get going, then we'll be off to the races, hopefully.
Sid, anything to add from your side?
I think the key message is be audacious about this, right? You will always see headwinds, why you shouldn't do this, why you should not do that. But if you look at past 100 years, no energy transition that has happened from all the way from whale oil to biomass, biomass to coal, coal to gas, gas to present-day renewables, neither has been straightforward, nor has it been what I call a step function, that something was there and next day it vanished. It was always a cusp. There were headwinds, people got creative, the financing community got very creative into structuring better products to support this transition. So this one is no different. You will always hear why things should not be done, challenges, being on the sidelines, not in the center stage, but sometimes you accomplish more by being on the sidelines and not getting the attention of the people who don't really matter, right? So be audacious, be creative, and let's keep pounding away.
I think that's a very good final statement for this panel. And with that, give the panelists a round of applause, please.